The Fed has done it again, completely giving into the biggest bubble ever in history. We cannot even fathom how much more this can expand, and yet here we are practically every single day, growing more and more massive. It remains to be seen if the Fed will ever go into the negative, following their peers in many countries around the world. For the time being, however, they're going with mass money printing and a whole list of programs feeding money to everybody except you and I. You came here for the truth, so let me unveil that for you. Today we're going to look at the Federal Reserve. They had their FOMC meeting, we got the information out, I put it all together here, connected some of the dots, and I'm going to bring that to you. You see, if you look at the statement and you're not actually focusing on what's going on in between all of that, reading between the lines, all you're going to know is the fact that the Federal Reserve kept interest rates where they were, rock bottom. But there's so much more to it, little tidbits, and they're not going to tell us everything. They're not going to tell us what's really going on, but these little tiny pieces of information, these nuggets of truth come out. And so we get that, put it together, and then we know what's really going on. But it takes a little bit of work. It takes some digging. So in this here, I just wanted to say right off the bat, we're not expecting negative rates right away. They have a few more tricks up their sleeve, and you could argue that these tricks have been done before. But what the Federal Reserve is doing right now is truly unprecedented on so many levels. They are just going full force into money printing, and there doesn't seem to be any stopping them. They are doing what all central banks are doing. Of course, it's not just the Federal Reserve. We could see that in Japan. They're doing the same thing. Bank of England, Bank of Canada, every single central bank right now is doing some sort of quantitative easing. Some of them are in the negative. We're seeing others that are buying everything and anything. It happens to be something that has never been done on such a level at this time. We're seeing it right now, 2020. It's unbelievable, but this is where we're at. We're making history right now. I've got a lot to cover in this video, so let's begin. Take a look at this quote here from Jerome Powell. We are not thinking about raising rates. We're not even thinking about raising rates. This is the mentality of the Federal Reserve right now. Could you even imagine bringing rates up to what was before, when they started all this, 2.5%? That is historically very low. And yet, 2.5% is considered high now. That's how embarrassing this really is. They are actually more likely to bring in negative rates than to go back into this territory for the foreseeable future. Who knows where we'll be at in 5 years, 10 years, but at least for the medium term, they do not expect to change their policy anytime soon, holding rates at rock bottom. We had interest rates that were climbing ever so slowly. And then what happened? Well, they decided to bring interest rates down, and that was a drastic move. They did so very rapidly. They didn't do it fast enough because it didn't have the effect that they wanted to, or maybe they did it too fast and that spooked the market a little bit. Regardless, everything that they were doing was supposedly to make everything run more smoothly. That isn't actually the case. There's so much more to it than that, and I've covered this so many times before. But let's look at the next step for the Federal Reserve, because they claim they're going to leave interest rates right here at the bottom. What is going on next? Powell said that the Fed was considering yield curve controls, but wasn't ready to proceed without more investigation. So we can expect it to come later in the year. We know exactly what's going on. They're just waiting. They know what they're going to do. They're never going to tell you right away, because if they suggest we're going to do this, but don't do that, then the traders and the market is just going to demand it. Markets come down, everything gets a little topsy-turvy. No. They have to tell you that they're doing some investigation. Just hang in there. A yield curve control policy means that the Fed would target interest rate levels and attempt to manage them with purchases in the Treasury market. They would not be the only ones doing this, of course, and it doesn't actually work, but nobody really cares about that. The Fed doesn't need to do it now. Yields are pretty low, but if they do it when the yields are rising sharply, it will be more difficult. Don't worry, they have an unlimited printing press, so why would you ever be concerned about that? Jerome Powell declined to comment on what steps Congress should take, but said it's possible that we will need to do more. And it's possible that Congress will need to do more. How much more can both of these institutions do? It's unbelievable to see what the Federal Reserve has done so far. All of these different things that they've created, the stimulus, the expansion of their balance sheet, interest rates at rock bottom, and yet they want to do more? What about the stimulus that has been given here from the government itself? This has really grown to levels, and I'll show you in a second here, that we've never seen before, and yet they have to do more. More isn't better in this case, all right? Maybe less is more, okay? That's how it should be. But they don't think like that. They just expand, 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 and it doesn't have a good track record when governments do this. The Fed also said it will work to continue to ensure households and businesses have access to credit by continuing to purchase treasury bonds and mortgage-backed securities at its current rate. Yes, that's right, mortgage-backed securities, buying them up, I think it was $40 billion or so. I'll get you the numbers. $40 billion a month, and that's going to somehow give households access to credit. This is a complete lie, and I don't care anybody out there that wants to talk about this and suggest it's a good thing. Please, they're just bailing out this failed toxic garbage, okay? That's just what it is. The statement directly from the Federal Reserve's own website, as I always bring it to you directly from the source. Here you might be able to see, I know the font is small, $80 billion a month of Treasury securities, and down here, $40 billion a month of mortgage-backed securities. So we can expect that the balance sheet will continue its trajectory, and that is up, up, and up. It has been growing so rapidly. Do you remember when the balance sheet was under $4 trillion? It seems like a long time ago, but it really isn't. And now it won't be long before it's at $8 trillion. We are expecting the balance sheet to exceed $10 trillion. The United States has never seen anything like this. Do you remember those times when they suggested that the balance sheet would go down to normal levels, or the process of normalization? Normalization is a funny word because it really shouldn't have much of a balance sheet. If anything, it's temporary. I would argue against the entire institution. But regardless, when you look at this normalization, and yet they brought it down to, I think it was 3.5 trillion at the lowest point, somewhere around there. And that was considered to be neutral. What a fraud that they've gotten everybody signed on to. Comments from Powell in response to reporter questions. Check this out. We would be prepared to tolerate, or I should say to welcome, very low readings on unemployment without worrying about inflation. So get that unemployment, the fake U3 unemployment rate, to come back down, and if inflation picks up dramatically, that's okay. People should be worried about this, but of course they won't, as long as their assets are rising. If their house suddenly costs twice as much, hey, that's a good thing. They'll feel rich. If their stock market they see that stock market is rising, hey, that's a good thing. They don't consider what are the repercussions of this. Northman Trader, today was a historic day. The Fed has fully embraced its capitulation to everything markets. It implicitly encourages asset price bubbles while lying about its role in exacerbating wealth inequality. It will keep printing with no end in sight and has no exit strategy, and that's really key. I'm glad he mentioned that. Yes, they can print. Yes, they can accelerate. But what happens? What happens to all of this? Doesn't it have a problem eventually, as we have seen 100% of the time in history? Well, they're not going to be there to actually bring this back, to reel it in. It's going to have to end badly. Frankly, this should scare the living hell out of everybody, for it shows how fragile the entire construct really must be. Look beyond today. What will the entire financial debt construct look like a year from now, the year after? It's a total disaster zone. Completely agree. Northman Trader definitely has some good things to say. You could check out his Twitter or his website at northmantrader.com, I believe it is. Always some good stuff. Take a look at this chart out of Bloomberg. I mean, it's unbelievable. Synchronized downturn. More than 90% of economies are set to experience a recession this year. You can see the red line on the right-hand side. We have never seen a time in which the whole world essentially had fallen down. Everything was synchronized together. There has been a lot more activities, particularly with the markets, that have been in sync since the year 2000, even more so after the financial crisis. But today, it's more than ever before. And that's very dangerous because essentially there's nowhere to hide. So all of the central banks right now are pumping the system up, and this does not end very nicely. Munchkin backs new stimulus targeted to stragglers in reopening. Treasury chief says funding should target specific industries. He said travel, retail businesses are among those needing help. That's right. If your business is in retail, if your business is in travel, maybe you get some extra funding. But if your business is in something else and you're struggling, well, all right, well, you're not going to get anything. This is the problem with all of these different stimulus plans because they are top-down looking. So the big boy government up there is going to decide who gets the money funneled down to them. They are the ones that are deciding, okay, you're going to get it, you're going to get it, and by the time it makes it to you, there isn't much left. That's just the way it is. That's why I don't like these. I think that they should probably reduce the burden on people of taxation. That's one thing. That's a stimulus program right there. But they'll never do that because there's another much more sinister reason why taxation exists in the first place. Really quickly, just wanted to mention the fact that an estimated 30 to 35 million people in the United States are still waiting for their paychecks. That relief paycheck, of course, payments of $1,200 per person or $2,400 per couple. And this right here just shows you that there has been massive delays on all counts. Counting the numbers of those unemployed has been terrible. This program here has not worked out. There have been so many different things right now that are just going haywire, and yet the market is ignoring it all. The market keeps rising as the central bank balance sheet keeps rising, as the economy continues to fall. They even used fake numbers for the unemployment rate. My goodness, admitted it on their website, and yet all the major news media is still reporting the false number. That's when you know you've got a serious problem. Federal spending and deficits set records through May. I mean, should anybody be surprised about this? There's so much more here. I have the chart that goes along with that. $4 trillion federal spending set a record through May. We're looking at this jumping so much higher than we've ever seen before. And does anybody say anything? Does anybody say maybe you should be a little bit more cautious with your spending? No, of course not. Not at all. The one place I'm really disappointed in with the US government is that they didn't beat their record. Time and time again, on average, they are using all of their funds to expand and expand and expand, and they were at 28 days actually creating a deficit here, the expansion of their debt all in this period of time. The balance sheet was expanding, okay? But look at this. May, Back in May, they're just showing you that it took 28 days to expand the national debt by $1 trillion. And this time around, 35 days. I mean, they're doing it too slowly. What? The next trillion is going to take 40 days? No. We have to step up our game. If we want to be able to destroy the currency in a rapid rate, you got to do this faster. You can't slow that pace down. So let's try to get it down to the 20 range, and then maybe every day. Just print $1 trillion every single day, pump it into the system somehow. We got to make this work. Come on, let's do it. Let's all cheer. USA, USA, USA. We have seen some governments around the world kind of going in the opposite direction, in some ways anyway, with their gold purchases. Many governments have decided that they're going away from the US dollar, at least some of them when you look at, let's say, Russia, for instance, and they have been purchasing more gold. This just shows you on many levels what's been happening with the different governments and how they have a little tit for tat. They have a little scrum in between each other. And I think this is really going, let's say, it's not looked at enough. So I just wanted to bring that to you, just show you that they've expanded. I made a post about this on the community section of my channel. And I think it was something around 30 tons were purchased. I have the number there, but regardless, the expansion has been quite significant here in a short period. So just wanted to show you that. I'm going to end the video there. If you found it informative, hit that thumbs up button. When you do, you are supporting me. Thank you very much. If you want to check me out on Instagram and Twitter, you can do so at The Money GPS. If you want to find out some information about e-commerce, you want to learn how to sell online, I've created a free e-course, not going to cost you anything. It's available at the AmazonGPS.com. All right, this one here is important because you're looking at this information. It's confusing, it's convoluted, but in these two books, I explain everything that you need to know. The link is in the description if you want the audiobook instead, themoneygps.com. And last but not least, have you seen this video yet? It has really taken off, that's for sure. Got 50,000 views in a matter of 24 hours. You got to check it out if you haven't already. Click it, I'll see you there.